Hey guys, Boris Lasser from BK Forex. Welcome to our daily Forex technicals. It's been a quiet start of the week. Pretty much looks like it's going to be that way. Past performance not indicative of future results. Trading Forex carries high level risk and may not be suitable for all investors. A high degree of leverage can work against you as well as for you. And before deciding trading any such leverage product, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists you could lose all your money, so you should really consider and be aware of the risk associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Information, including commentary and trade ideas provided on bkforex.com, should not be relied upon as substitute of sensitive independent research. And we provide this information for informational purposes only. The opinion and information presented here do not take into account your particular individual investment objectives, financial situation, or needs, and all such investors should obtain advice based upon their own unique situation and personal risk appetite. We're not responsible for any loss incurred on these investments made by readers and clients as a result of the information contained here, and we do not render investment, legal, tax, or professional advice. Such advice is needed. Seek advice from a competent professional. So very, very quiet start of the week, but a couple of interesting levels for all of us to take a look at. So Euro, obviously, the Euro level here that everybody's watching as we start is the 33.50 level. 33.50 goes, we have a reasonable chance then to kind of drift all the way down to the 3300s. The real support in the Euro is this 3300 over here, of course, and possibly underneath it, sort of between the 3250 and the 3300 is the real support level. So if we can press the euro lower, the only key event on the calendar today is the ECOFIN meeting out of the eurozone. If they make any noise about how high the euro is, or the French come in and be very, very boisterous and vociferous, then there's potential for us to drift kind of lower. Euro obviously has been a sell on rallies lately. This thing with Draghi broke the back of euro longs for the time being, and now we had a very anemic rally on Friday, couldn't even clear 34.25, and then started to fade back down. If we retake the 34.25s, the situation definitely changes to a more neutral position, and we do have a reasonable chance if we take 34.25s to come back up to 3500. On the other hand, if we stay below these levels and start drifting lower, then it's very reasonable for us to see if they can test 3300, because that's really the big support level. Very thin markets. Japan is out. China is out. It's lunar holiday. So right now, obviously, very, very quiet day of the week. And in these kind of markets, it can go either way. We can just have absolutely no action, or we could have one couple of big orders and just push this thing all down, especially when Europe comes back online and starts really moving things around. Dollar yen also fading. Those of you who saw my CNBC hit on Friday, I think we made the near-term tops here, or at least we're operating under that assumption, because 94's failed, 94's failed again. Right now, basically, we're staying underneath this level. 92 does support, though, so the critical thing to me here is 92 has to go. If 92 goes, then we have a reasonable chance to probably distribute all the way down to 9100s. If we can support here, longer we support here, the higher the probability we can remount the rally back up to 94s. So it's very much in the no man's land right now, and I'm watching both edges of the trade to see how directionality shapes up. But for now, obviously, the near-term bias is to the downside, unless we hold this level here and turn ourselves back up above 93s, then we have a reasonable chance to remount 94s. If we take out 92s, like I said, it's very, very probable that we can take all the way down to 91s, which was the level of breakout and where we're going to have the real support in the dollar yen. Cable still doing its recovery mode, although interesting thing about cable is sort of, the recovery mode that we're seeing here is obviously running into pretty serious 58.50 resistance. We can clear this. If we clear this, that would be a very bullish sign. The fact that we can take out the 58.50 resistance would really open a way for us to kind of recapture 59.50s, possibly even 60.100 as a kind of a total rebuild in the cable mode. Don't know what would motivate this kind of particular move right now. Obviously, we'd have to have some positive UK data. The big rebound here was essentially a reflex against the fact that Carney, who's the new BOE governor, did not sound nearly as dovish as I was already thought that he would, and that created a little bit of a oomph in a short covering rally. But it's still very much a short covering rally. So we're really, in order to believe this cable move as a bottoming move, you got to have the 58.50s taken out with conviction. And I think the jury very much still out on that. And Aussie, same kind of a thing. Aussie basically took down the 122.50s, came back up. We had modestly better data out of China. That prompted a little bit of reflex rally to the upside. Aussie still very much out of favor on the investment world. Everybody's basically watching Aussie as a contractionary interest rate story. If that's the case, in other words, if the RBA continues to compress the interest rate differential, the Aussie loses luster, on a continuous basis. So to me, unless we clear 103.50 and hold this level, hold above 103.50 to recover back up, Aussie still very much a sell in the rallies as well. Although the 102.50 definitely did hold. And for us, if we go back out on a longer term basis, if we go back 6 months, this is a pretty serious, significant support level. So it's not a surprise that we bounced, came back up. Now the critical question is, if we retest it and break down below it, then the next support level is 101.50. That's really the key level to the downside. Crosses today, there was a little bit of a story in Euro Swiss because the Swiss are once again on the wires talking up the Swiss franc, but it's actually had very minimum impact on a Euro Swiss to the upside. Again, the Euro Swiss trade was the fact that the euro had a big rally on the assumption that it's not fracturing, and a lot of that now is starting to get back into speculation because obviously euro got a little too high. The eurozone itself not showing a really great improvement in the economic data, and there's fear that there's going to be no more bickering. If we have more bickering at the ECOFIN, this actually could come back down to 2250s and possibly to 2200s against the wishes of the S&B. So this could be an interesting trade as we go forward. A couple of other crosses that I think are worth looking at. Obviously, euro yen. If we're bearish yen, then the euro yen is a top here, and really the support in the euro yen is 120. So this could be, if you're sort of bearish yen, bearish euros, the fastest way to get there is going to be through the euro yen cross. But if this is a bottom, this could really ramp up against you and move back up against you. One cross that I kind of found interesting looking over the weekend was pound Aussie. And the reason why is because so you have it's a tale of two uglies, right? Everybody hates the pound, everybody hates the Aussie. But the interesting thing here is people are beginning to love the pound a little bit more. The Aussie still remains flat. If you have this move in the 58.50s through the pound, you definitely have this takeout of the 5300s, which has been a triple kind of a triple top support here. And a move through the 5300s could really open a way towards the 5500 level in the pound odd as a big breakaway move. So this is kind of interesting, a trade to the upside that's very much off the beaten path. Anyways, that's how the week shapes up. Definitely a relatively quiet week, but some very key levels to look for. Reviewing back, euro, the key level here is 33.50 down to 3300s, and in the yen, the key level is obviously 92 down to 91s on the break to the downside. And Aussie and cable still pretty much in consolidation mode, although the cable for us, the upside cable here is the 58.50. That's the key level we want to be looking at to see that the cable recovery is not just a dead cat bounce, but is actually a pretty serious bottoming formation. Anyways, wishing you guys the best of luck and the best of trading. Spore Schlossberg, over and out.